Good evening, this is Giuseppe Basile. I'm the analyst trader. You can find at the blog fibstalker.com. I also post regularly on Twitter using the @fibstalker nickname. Good evening. This video is part of my weekly review, and it's the Sunday, July the 21st, 2013 daily review for the four main markets I follow: the euro dollar, the dollar index, the S&P 500 E-mini futures, and the US dollar versus the Canadian dollar pair. So let's start from the daily chart of the EuroFX currency futures contract. What you see on the screen is the continuous contract aligned to the September 2013 expiration. Now, as you saw from the weekly review, we have still this supporting area, which was known since the beginning of February, and I've been following this area of support that extends from 129.10 to down to 127.16. And what happened in the last few weeks, we saw again program trading and bulls defending big money, defending this 129.10 level, and price eventually moved higher. Now it's very important to notice that in these two huge two-day moves we had last 2 weeks ago, price also pierced this important measure move. If price went to continue lower, this 131.69 level would not have been pierced, meaning that the participation of long was strong enough to break the next sequence of measured moves lower on the daily. So at the moment we have a confirmed move higher on top of a weekly support, so not very long-term support, and we could make the case that price traded actually this next measure move, which came at this 129.90, and the participation of long was so eager to actually have a 6 pips front run here. So long entered and program trading entered as well. Now, as we can see, we have this 133.16, 133.10 level, which is going to be the next level of profit taking, but price could actually continue higher into the 134.85 level, and that's what I anticipate. That's my high probability scenario, just a continuation higher, and the opportunity to enter was this 129.90, and most recently, if we zoom on the price action of the last few days, most recently it was this lows to highs, and as you can see, we had participation in this 130.89, 130.95 area with price that basically never came below this 130.67. Not easy to see these levels, but here the red line is the 130.67. Price never went below this. So as you can see, a continuation high would bring price into this 132.29, and then in the first target 133.10. So that's what we have to anticipate. Please review the plan on the newsletter as well. Moving to the dollar index, not a lot to say. 84.50 again acting as a resistance here, and I want to remind you that the continuation of the previous measured move, which was actually, as we can see here, it was it showed up a participation in the 81.70 area, then failed after that, and the next move higher, however, brought price right into that minus 23.6%. It's like program trading didn't have finished its business here before starting and moving lower. Now this figure here is M4 marder on a resistance here. So program trading, I believe, will keep pushing price lower, and I believe we should see in the coming 2-3 weeks this level here, 80.60, taken out. I don't anticipate at this stage 84.50 to be retested again. Moving to the SP500, in the weekly review I showed you this 1560 level. It has a first target in the 1620, and we might get there before we get a sensitive reaction lower here. Once we get there, there will be two levels that we will need to watch. I believe when we get there, we will have some profit taking that has the potential to bring price back into this 1670 area here, which is coinciding more or less with previous highs. But it's still too early to say that. Now, if we get a retracement at the beginning of the week, starting from the beginning of the week, this retracement should and has the potential to bring price into this 1655, which are provided in the trading plan I'm attaching to the newsletter. Please review that. And price should never move below 1647. If that's the case, then we could see a larger retracement into 1620 area, but it's still early to say that. So at the moment, I will just keep in mind this 1655 if we get a retracement from the current levels. And finally, to close with the US dollar versus the Canadian dollar, we know that the highs here, 105.60, were the previous strong weekly resistance, and price came down, and it's not surprised that this reaction or some sort of profit taking here rather than new longs happened in this area starting from the 103.70. So nothing strange there. What is important to notice is that apparently price action is showing that program trading is now trading in extensions already, and as we can see, tracing from the lows below the move lower to lows, we have this 105.40 level, 30 level, and as we can see, price was rejected now 3 times at this level. So probably if we get again a run up to this level, this could be a new opportunity to sell, now supported from a descending 20-day moving average, and the first target would be this 102.80 level, followed by this 102 level here. So this is it for the daily review. I hope this is useful. If you want to receive this review, just subscribe the newsletter, and I'll be glad to send this whenever I send that newsletter. Thank you very much for your attention, and a great trading week. Bye bye.